Hey guys, it's James and we're back with another valuation video. Today we are looking at Walmart, or ticker symbol WMT. WMT or Walmart is sitting around $142.75 today with a PE ratio of 44.11, which is about twice as much as the current S&P 500 PE ratio average. The dividend yield is sitting around 1.57% with an annual dividend payout of $2.24. So what are we doing in this video? Well, we're taking my dividend portfolio tracker spreadsheet, or under our valuation tab, and we're going to evaluate Walmart using the discounted cash flow model, Graham's model, and the dividend discount model. If you guys want to follow along with this spreadsheet, I offer this spreadsheet over on my Patreon. If you sign up, you'll get our dividend portfolio tracker, our future value workbook, where you can predict using the compound interest formula your future value of your portfolio, as well as a little mini budget tracker. So let's get started with this valuation video. So where did I find these numbers for the discounted cash flow model? Well, first off, we need the previous 10 years free cash flow. And where did I find that? I found that over on Y charts, ticker symbol WMT. They actually give it in quarterly numbers. So I went back for all the way to 2012, 10 years prior, came all the way up to the current year, added up the free cash flows for each quarter, and got the free cash flows right here. Once that happened, all of these right here averaged, gave me an average growth of free cash flow. And then the perpetual growth rate is going to be anywhere from 1 to about 2.5%. I feel comfortable with 1.5%, which is very typical for the DCF model. Discount rate of around 8%, very typical. And then the cash and debt. I found these numbers over on Seeking Alpha. Over on Seeking Alpha's page for Walmart, under the valuation tab, we find cash and total debt. Total debt $68 billion and cash $11.59 billion. I do have the premium subscription to Seeking Alpha, and currently Seeking Alpha is letting me give you premium subscription for very cheap. So currently Seeking Alpha is only $39, where it has previously been up to $239, and I believe my normal discount I can get you is about $99 for the first year. Well, right now up until January 3rd of 2023, you can get an annual subscription for the first year for $39 if you're interested. Back over to our valuation for Walmart. Over on this tab right here, we go ahead and put in the cash and debt, the numbers we got from Seeking Alpha, and then we'll move on to the Graham's model. Now, I only have two things here for Graham's model. Everything else is put into the formula here, and it'll calculate the annual or the expected growth rate of Walmart. Over the course of the next 5 years, analysts are projecting about 4.5% growth per year. The AAA corporate bond rate is sitting at around 4.24%, and you can find that from a quick Google search. The dividend discount model, moving on, the dividend payout and the 5-year dividend growth, well, we can find that on Seeking Alpha as well. Over on Seeking Alpha's Walmart page, under dividends, sub tab dividend scorecard, right here under the dividend summary, you can see their annual payout is expected to be $2.24 over the next year, and a 5-year dividend growth rate of 1.89%, with growing their dividend at around 49 years. So not too bad. Taking that, putting it into the dividend discount model portion, and then the risk-free rate is our 10-year bond yield. So put in 3.4%, and the return of the market, we're going to be putting in 6% here. Over the course of the next 5 to 10 years, we'll assume that the return of the market is going to be around 6%. So coming over here, our remaining yellow boxes here, go ahead and apply a margin of safety, yes, and we're going to start with 25%. We'll go ahead and click evaluate. We can see that Walmart is projected as a sell with a 25% margin of safety. So the average valuation came out to be around $85 when you averaged these three valuations up. The DCF model, grams model, and the dividend discount model averaged to about $85. 25% margin of safety brings us to about $63, which is a very strong sell at the current price. That would kind of make sense if you have a PE ratio of 44 and the average PE ratio is about half. If you cut this price in half, you're close to about $70 to $75, which is very close to our current average valuation. So we're gonna call Walmart a sell. So with that, that concludes today's video. If you guys want to follow along and do your own valuation with the DCF model, grams model, and dividend discount model, head over to Patreon and download the spreadsheet. And with that, thanks for watching.